Hey traders, Mike Sir here. I came across this article last week about a retail trader who lost over $400,000 of his own money. He shared his painful experiences through this article. So in this video, I'm going to share with you more details of the story of this inexperienced trader who lost his entire net worth, and I'll outline the trading mistakes that he made so you can learn from this. So let's get started. The story revolves around a young retail trader who was 26 years old and who wished to remain anonymous, which I would assume was due to him feeling embarrassed about the stupid trading mistakes that he made. Now, prior to him being introduced to the financial markets, he was a pretty conservative guy. He was a new immigrant to the US and didn't grow up with money. He had to hustle and work odd jobs just to make it through college. Now, by the time that he graduated, he got into sales, which offered him high earning potential, and due to his hustle, he was able to make a pretty decent money at his job. He worked extremely hard at his job for several years and rarely spent money on anything. Therefore, he was able to save a majority of his income, but he knew that he wouldn't be able to sustain his working hours, so he started looking into investing. Now, being super conservative, he had $300,000 in a high-yield savings account that was paying a little over 3% return per year. This was just too little of a return for him, so he started researching where to put his money to work. He deemed the cryptocurrency market too risky when he lost $3,000 in 2017, so he stuck with just investing in US company stocks. Now, he got lucky during the meme craze when stocks like GameStop, AMC, BlackBerry skyrocketed in value, but not due to their fundamentals, but rather retail trader-driven popularity. At first, he invested $5,000 into AMC stock, which was a movie theater chain, and suddenly in a short period of time, his $5,000 became $15,000, a 300% increase. Now, this got him hooked, and then that translated that $15,000 into over $50,000 when he bet on the silver price going up. Then his conservative mindset kicked in, and he knew he was playing with fire, so what he wanted to do was put his hard-earned money into a company that had strong fundamentals, was profitable, and loved by Wall Street analysts. Now, he found the exact company that fit this profile of being a safe investment with a limited amount of risk, and not these meme stocks that can rise and fall sharply. The company was Alibaba, a Chinese multinational tech company who I also profiled in a past video. Before I share the details of the Alibaba trade, please take a moment to like this video. I would really appreciate your support. So this young retail trader made a lot of mistakes, which led to him losing over $400,000. Now, what I'm going to do here is list 5 trading mistakes that he made that you should definitely be aware of and avoid making. The first mistake that he made was he put all his trading capital into only one company stock. There was no diversification strategy in terms of sector or stock. He basically bet the farm on one company. Now, I completely understand if a trader has $100 or even $1,000 to put it all in one stock, because it doesn't make sense to diversify with such a small amount of money. However, in this case, $400,000 seems very risky to bet on one stock, because if the company fails to perform well, then you are done. Now, if I was in his shoes, I'd probably put capital to work in at least 3 to 4 different sectors, and within each sector to buy at least 2 to 3 different companies. The second mistake that he made was he invested $300,000 into Alibaba all at once, which at the time was basically every single liquid asset in his account. He emptied his entire bank account to invest into Alibaba right away. Now, even if you were very bullish on a stock or a company, you shouldn't put all your assets to work right away. Now, what he could have done is slowly accumulate his stock positions and split his trades into at least 3 or 4 positions. One is a starter position where he invests, let's just say $100,000, which is 1/3 of his capital. then he can assess whether he is still bullish on the company or not. And then if he is, then he can add another 1/3 position. And if he still likes the stock, then he can add the rest of his 1/3 position. A safer strategy would be to start with a starter position first, perhaps a small position, and as the price goes in your favor, then you can add more. This way, if the start position loses money, he won't lose that much. Once he bought $300,000 worth of Alibaba, his positions immediately went south, meaning that he was losing money right from the get-go. But a few months later, he managed to save another $100,000 from his salary, which at that time was again all the liquid cash that he had, and he immediately put it all into Alibaba. He was so cash poor that he almost missed his rent payment. Now, there's one rule in trading that many successful traders follow is they never add to a losing position. His thinking was, this stock's going to rebound, or I can now buy more at a lower price than before, so therefore I will be able to make a lot more money. The fourth mistake that he made was this trader decided to invest in Alibaba through buying call option contracts. Now, for those who don't know about call options, they are a higher risk trading instrument called a derivative, which gives the buyer the right to buy the stock at a specified price within a specific time period. Now, this means that he wasn't buying shares in the company, but rather the contract, which gives him the option to buy. Now, I'll go into more detail in future videos on how option contracts work. Now, in his case, he bought a $200 strike price call option when the price of the stock was $245, meaning that it was already in the money and it wasn't a highly speculative bet on the company. However, the reality of option contracts is you could lose all your money even if the stock didn't go to zero, as option contracts can expire worthless. Now, this was a head scratcher for me because rarely do super conservative investors invest using options, or even if they do, they use hedging strategies to minimize their risk. The fifth mistake is many amateur traders or investors get into an investment without thinking what will happen if the stock that they bought goes down in value. They only think of how much they're going to make. Now, in this trader's case, he never thought in a million years that his $400,000 could become worthless. He never thought that Alibaba stock would lose that much in value because he felt it was a solid company. And in the end, he couldn't take the losses anymore and walked away with only $20,000 of his initial $400,000. Thanks for watching. If you like this video and want to watch other videos, please click on the left for more videos like this and click on the right for the full playlist. I'll see you on the next video.